Hey traders, happy Tuesday, everybody. Hope everyone is doing well. Time to caffeinate and dominate. Yes, this is my big vat of coffee for the morning that I have yet to sip into. All right, hope everyone's doing well. All right, so let's get into it. What are we dealing with here this morning? We're going to take a look at our hot zone aftermath, what high impact events are coming up later on today, what kind of action are we seeing so far in the broader averages, what I have my eye on, things we need to be aware of. So let's go ahead and dive into it. This morning at 8 a.m., the president was on CNBC. Now, look, I'm not political. Politics have no place in trading. However, events that have to do with the key players in the tariff conversation, obviously the president, these are going to be things to keep an eye on. But this is how we do it, right? I don't need to listen to what's happening. Same thing goes with Jerome Powell, right? When we were trading on Wednesday and Jerome starts the press conference, what are we looking at? We're looking at everything that's said and done through the distillation of price. So we know what time the event happened, right? Whoever's speaking, it doesn't matter who it is. So 8 a.m., we know we would expect some volatility. And volatility we got. You can see this candle right here and the high to low range that plotted right away. And so, the takeaway is basically whether it's that event alone or just a general drift lower below yesterday's cash close, our previous session close, whatever it might be, we're below 63, 69 and a half, and we're moving lower. That's all there is to it. So when I take a peek at each individual index, remember, I don't want to paint the entire market with one brush. In fact, there's probably no such thing as the market, right? We're talking about individual indices weighted in their own way. Earnings are going to impact them individually based on that stock's weighting within that. So you take a look at the NASDAQ, same kind of candle, high volatility, but in this case, we're still trading above that previous session close here. We have some Darvis support, we have some Darvis resistance, and we're stuck in a range for now. I'll be paying a lot of attention to this range going forward. So take a look at the notes here on the side. So we know that the China deal discussion was made. It's definitely going to be something that will be discussed probably the second half of the year. This is not going to be a done deal this month, but it's definitely going to be something that's going to be an ongoing issue. I've got the sanity check running on the daily time frame, by the way. And the reason for that is this thing right here is I'm looking at these different pullbacks from the all-time high. We did pull back over 3%, just over 3% on Friday, but that was the perfect storm, right? That was tariffs. That was Powell being very, very non-committal on the rate cuts, which non-farm payroll promptly fixed. In fact, there's a 90+% expectation that the Federal Reserve is going to cut at that September meeting. But what else do we have to keep an eye on? India tariffs, right? That's still on the table. Interesting discussion where the president mentioned he was fine with the price of oil at the moment, and that would put pressure on Putin. Clearly, oil, you can see that spike there. That was when it was mentioned. So oil's still been heavy. This is not heaviness due to what's been said at this interview on television, but do take a look at the daily time frame of oil, right? This is still pretty heavy, and I've been very cautious about swing trading oil stocks in the XLE, OIH, XOP, but there's some interesting support right around $64.50 a barrel. And it's been pretty decent support for some time. I'd like to see an oversold reading to do something about that, but I'm going to be very cautious with swing trading in these sectors. However, if we stretch out to a weekly time frame, there could be some interesting opportunities with oil and oil stocks going forward. So, we want to make sure that we're separating time frame and time horizon expectations. If I'm looking at a 5-minute chart, like we are going to be doing in about 10 minutes, we're going to be focusing on day trading as we go through the morning. I'm going to be focusing on swing trading after 10:30. So let's wait for that first 30 minutes to go by before we even think about any kind of swing trade. Ideally, we'll wait till the completion of the initial balance, right? That's 10:30. Trade deals with Japan, trade deals with EU, but there's a big but here. 35% tariffs are looming overhead if quote unquote obligations are not met. And then there's a Fed chair decision soon. So they're still, while he's going to probably finish his tenure at the Federal Reserve, they're already working on Powell's replacement. Kind of in, I guess, some way, making him a lame duck, so to speak. We'll see how that pans out. Clearly, the markets at this point, right? S&P, NASDAQ, even treasuries don't seem to be that concerned. So let's talk about treasuries for a moment, because we do have our 3 p.m. long-term account conversation coming up. And we do have that long position in the TLT, but way down below where we are right now. So we're well up off those lows that we bought into via TLT shares. But I do know there's some resistance overhead, and that resistance is around that 116.03 level. So if we're really going to finally get that breakout, we need to not only break that level, but we also need to stay above, close above that level. So when bonds are moving higher, that's actually yields moving lower, right? So when ZB, TLT, when those contracts are moving higher, that's a lower yield conversation, which would sync up well with the expectation that over the next 12 months, we could see up to 4 quarter-point cuts, likely 1 or 2 by the end of this year, probably 1 because September is 90% baked in. And unless Powell wants to release the Kraken in August at Jackson Hole, we're going to see that quarter-point cut in at the September meeting. A couple hot zone heads up. We've got the ISM services PMI coming up at 10 a.m. Caterpillar, Pfizer, Amgen, AMD, SMCI, they're all reporting today. So remember, it only matters so much as they're weighting in the sector that they belong to and the index that they're heavily weighted in. These are all fairly heavily weighted stocks: XLI, XLV, semiconductors. So we'll keep an eye on that in terms of impact, but none of them should be massive movers. AMD obviously has the ability to have some effect on the SMH, the semiconductor sector, but probably not largely on the NASDAQ the way the Awesome 8 or the Mag 7 would, right? So that's something else to keep in mind. All right, moving on then to what we're going to be looking at once the bell rings here in about 2 minutes. Bitcoin, it continues to struggle, gang. There's a reason we kind of have left IBIT alone, even though when we look at that daily time frame, it looks moderately supported. I think one thing to make really clear is it's been multiple days since Bitcoin lost its uptrend, specifically on the 30th of July. So this is not the same uptrend that we dealt with for a very short period of time through mid to late July. So this is more of a neutral bullish market. I'm not bearish Bitcoin, but of all the things I could do, Bitcoin's not really near the top of the list. Now, if there's a day trade to be had, cool. It's just now coming out of a 5-minute downtrend. So, probably not high on my list for a buy, but we'll see if there are opportunities to get long puts in IBIT, maybe short BTC as long as it's sitting below 115, 315. So we'll see what happens there. I mentioned crude earlier. Do we like crude for a day trade here today? If crude's going to be a day trade today, I would probably prefer the short side. We've got the previous session close up here. We've got the hourly price movement range resistance up in here. So I'd probably favor getting long puts on UCO, USO, maybe shorting crude oil, MCL. We'll keep an eye on that if it bounces. But I want to keep an eye on the Dow as well. If the Dow starts to strengthen, usually it can take crude oil with it. So we'll see what the Dow does. So let's go take a peek at the YM, because the Russell, the Dow, and the S&P are all below the previous session close. The NASDAQ remains unched, right? It's pretty much right at that previous session close, but Dow is well below it. So as long as we're below this previous session close right here, yesterday's cash close, I'll probably be mostly bearish, not only on the Dow, but likely the Russell as well. I want to see what the push-pull between this weak Dow and this relatively neutral NASDAQ is before I even touch the S&P. Because remember, the S&P is a little dog that the NASDAQ or the Dow take for a walk. NASDAQ's probably largely more influential, but remember, there's always going to be that tug of war with the ES when the NASDAQ and the Dow are kind of doing opposite things. But you can see here, the NAS is putting on quite a show as it's trying to stay above that previous session close. So NAS is about as bullish an index as I'm looking at here this morning. Well, there you go. So we're here's the bell, and there's the tumble, and that's what I'm talking about. So if we're now looking at all four indices below the previous session close on the bell, and this is a huge thing. Remember, gang, when we're day trading, 5-minute time frame, today in, today out, let's let the first 5 to 10 minutes go by. This isn't a horse race. As soon as the bell rings, doesn't mean I'm going to be slinging trades or anything. Let's see where we can head down to. So I'm looking at two levels on the NAS at the moment. One is the overnight low, but really I'm looking at this hourly price movement range down in here if there is going to be a buy, right? And that's a big if. That's a huge if. All right, let's see what else you've got going on. We know metals have been struggling, and that had to do with that tariff on metals. Copper has yet, I mean, it took a knee and has yet to even get up off the ground. So copper's continuing to struggle. That's going to drag a lot of the XME names lower. And while I would love to look at things like Freeport-McMoRan, we would want it to really be when copper is showing us a better bit of clarity there. Gold's been choppy, but Newmont Mining's been pretty good intraday. All right, let's talk about gold for a moment. What is it that we might look at gold here as we're focusing on potentially a long buy? I'd say let's be watching gold around 34.15. Yes, I want to pull back. I'm not going to buy into a higher high. I want to pull back, and we'll see if we can get either a Darvis to form in the interim, or otherwise I'll be waiting for a mean reversion here on gold. All right, and gold's been very volatile. It's not in an uptrend on the longer term time frame on the daily, but it's definitely showing us some interesting signs for day trade on the 5-minute chart. A couple reminders: we've got our XLV position. Bonds are moving nicely for that long-term account growth. That's going to be at 3 p.m. today in the Sector Secrets Mastery Room. And as I mentioned, I was looking at the NAS staying above 23,350, and it's tumbled down through there. So now all four indices are below the previous session close, and I would call this largely a fairly bearish morning so far, right? Now, let's keep in perspective. This is where the NAS is, right, up in here. But when we're looking at a 5-minute time frame, you know, the drama unfolds a lot differently than sort of the relative stoicism of a daily time frame. So let's see what else we've got. Here, 3 minutes after the bell, VIX is actually moving up a little bit, not surprising with the weakness in the broader averages. Remember, again, the VIX is measuring the S&P via SPX options, right? So this is very much an S&P narrative. VIX is up a little bit, but really, again, you know, a lot of folks will make a lot of the VIX being up. But again, this is where the VIX is relative to some of the highs we just saw on Friday. And even Friday's highs were not crazy highs considering the range that we've been in, right? Anything above 19.5 on the VX futures is quote unquote high. Now, if it can sustain that, close above it and continue to propel higher, that's a whole different conversation, because we saw on Monday, we went right back through that 19.5 area. So that's not an elevated VIX, and it wasn't a super elevated VIX relative to the range that it's been in. In fact, you know, it's just been the 16th of July that we were up at that same level. And you see that 16th July high and that Friday high pretty much synced up? Kind of interesting there. I won't make too much of that at all. As far as early morning strength, regional banks are showing an uptrend, trying to organize into an uptrend. That could help the Russell. So we'll see if anything shapes up there. So we'll keep an eye on KRE and maybe the RTY, but I'll focus on the KRE. Now remember, if the Russell's moving lower, that's not going to bode really well for KRE. KRE is going to have to fight that much harder to to climb with a weak Russell. So let's remember that's not great alignment here this morning. What else is moving higher? GDX. Okay, well, if gold's moving higher, no surprise, we're seeing some strength in GDX. So if I've got some GDX strength, we can look at GDX itself. We can look at Newmont Mining, maybe Barrick, Agnico. So there might be some long side day trades to be had in that strength. So I'm not going to be surprised when the number one weighted stock in the GDX is moving straight up. We'll see if there's any opportunity there. So unless silver and gold or silver and copper are moving higher along with gold, we'll probably steer clear of metals and mining's names and just focus on maybe gold mining names. All right, what else is up? Utilities, not surprising. All four averages are moving lower. Utilities moving higher. So we'll definitely keep an eye on XLU this morning. XLU has some strong stocks within it. Duke, Southern, I believe Dominion still been an uptrend. This is where VST has been. So let's see what VST is up to here this morning. So, we're focusing on three things. All right, just keep it really simple. What are the relative outperformers? Things that are stronger, or, you could have a relative outperformer to the downside, right? If the NASDAQ's tumbling and we see that one of the big 7 or big 8 stocks are moving lower in a cleaner way, we'll take a look at it. So let's find the relative outperformers. And then right now I'm looking at strength because we've seen many mornings where there's a sell-off at the bell and then we start to see the broader averages climb. So I'm not going to be, rope-a-doped into being bearish all morning or all day until we let that first 5 or 10 minutes go by. It's only been 6 minutes. We'll get a much better idea on that. In the meantime, all right, one of the alerts we sent out here in the mastery was Google. We've already had an optional T1 and we have had a wick. Let's see if that's a harbinger for some follow through. That would be fantastic. Remember, our Google entry was at 15 August 190 call. We've already scaled out of it optionally, or some of you might have decided, you know what, Rog, Google's pretty strong. I like the possibility of it reaching 196.50. And you can see we're right there knocking on the door. So this might be a target on those Google 15 August 190 calls. If you've already scaled out, cool. Don't scale out again. If you've already paid yourself, we've already had a nice move to 725, which is great. So where are those trading right now? Let's actually go take a look at where those Google August 15 190s are trading right now. That open trade, nice, 865. So look, that T1 is going to represent a 100% return. And that's actually ahead of schedule in terms of return. If I can get 50 to 75% at T1 based on premium paid, I'm tickled pink. It gives us at least a 2-to-1 risk reward on that trade. But right now, you can see where Google's hanging out and we're knocking right on the door. So remember, if you did not scale out at the optional, feel free to do it at 196.50. But if you have, we'll start taking a look at T2. And I'm going to be ambitious with T2, right? Too many traders are greedy with their T1s and not greedy enough with their T2s. I won't even think about it till we get to about 200 for a second target, maybe even higher. But remember, we need to move to break even now. Close to 100% return on the optional T1, definitely a 100% return on the T1 itself, okay? And that is all that's all listed in the original alert that was sent out. So super move on Google for our swing trades. All right, so we know what we're looking at here this morning. First 20 minutes, we can start to get a really good idea of what we want to do. Broader averages after 10 minutes are already moving higher. So I'm not going to just indiscriminately get short at the bell. We know a lot of times that's a clear rope-a-dope move. You can see Google's moving higher. NASDAQ is trying to get some legs underneath it. And what we have now is a pretty good idea that if we can retake that previous session close, Google's going to continue to move. We'll keep an eye on utilities, which utilities could struggle if there's risk appetite coming in. So remember, if you have early morning strength in utilities and the broader averages start to climb, things like utilities, staples, probably not going to have the follow through we want. We'll see what regional banks can do. that might be a really good one to focus on. We still have that 10 o'clock hot zone coming up at the top of the hour. So if we do get any day trading fills, I ideally like them by about 9:50. So that is our morning intel for the morning. And let's see what we've got coming up here for the rest of the morning and as we go into our swings.